Hello viewers and welcome to the channel. My name is Shannon Rivkin. The date is the 3rd of August 2022. Subject today, what is behind the recent rallies in buy now pay later names like Zip and Sezzle? So it's been an incredible rally actually from the lows. I mean, in the scheme of a share price chart since the beginning of 2020, it certainly doesn't look like much. You can see here, but in percentage terms, we've seen some pretty significant rallies from the lows. And of course, Zip and Sezzle tied together by, to some degree at least, by the fact that until only recently, Zip was going to acquire Sezzle in an all-share offer. And really, you know, the conclusion of that deal seems to have been a catalyst for the performance of both names. So, you know, just looking at the share price charts there, hard to really see outside of what I said. You know, that end of that merger, which, you know, at least they pitched as a way to get scale and a way to, you know, tackle the big boys like Apple's buy now pay later product, Affirm, Afterpay, and Klarna. But this story of that scale no longer being much of a concern by the market if you look at the share price. But I think overlaid against this, I've added US 10-year bond yields, because I think the real story in the performance of buy now pay later, but you know, all tech stocks really has been the impact of rising bond yields on valuations. I've talked about it on this channel before, the impact on discounted cash flow valuations that rising interest rates have had. And you know, if you look really, here is where we start to see, you know, bond yields start to tick up significantly, and you know, the beginning of last year is where they really start to ratchet up, which kind of looks like here marks a big top on both of these stocks, and only now really have we started to see those bond yields turn around, which I truly believe is at least explains part of the recovery in these share prices. Although I think probably a bigger part of that story is what was factored into, I think, to the share prices at these low levels. I think both for Zip and Sezzle, it's a very, I should say, certainly Sezzle, once this deal fell over, immediately, you know, there were quite a few broker reports suggesting that Sezzle didn't have long to go as a viable listed entity. You know, and the environment is of course so changed now, and during these, you know, periods of high share prices when spending online remained very bright, bad debts remained very low, and you know, these companies continue to expand their transaction volumes on their platform, as the economy has started to slow, as interest rates have started to increase. We've seen a huge impact both on activity, which is slowing down, and also potential bad debts, which is ultimately showing, and this is probably the first time these names have seen this sort of environment, you know, a rising interest rate environment, and what potential that can have on bad debts. And for companies that are, you know, cash flow negative already, based on, you know, real hunt for market share, an increase in bad debts has meant that the path to profitability has looked further and further away. But the recent commentary from both companies, of course, refocusing on getting to profitability, winding back spending on marketing, getting their process in order to make sure that bad debts remain at tolerable levels, are, at least in the case of Zip, achievable targets. I think Sezzle probably, you know, looks a tougher story to buy, but certainly based from where they were trading, I think Sezzle was, you know, well under $100 million market cap. I think Zip only about $150 million market cap at one point, almost priced, I think, for you know, the eventual bankruptcy of both names. All you need to see is these names survive, get to break even, and because of the scalability of their businesses, it's easy to see these being pretty cheap at those levels. So I can understand why they've rallied, although starting to get to the point where we have to actually see some of the fruits of their labor come through. Really want to see a path to profitability. So I think the next few quarters will be really important as to whether this sector itself is actually, you know, viable outside of the big few names that, almost I can say in the case of Afterpay or PayPal or Apple's new product, is possibly could be simply seen as loss leaders during tough market times, and in better market periods, of course, you know, can be quite a profitable segment. Anyway, that's it for this week's video. Thanks for tuning on. If you like the video, please click like and subscribe, and I will be back with you in another week.